Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today to order.
Welcome back to Bitcoin Capital. So 2025 has been an exciting year already. We're barely out of the first quarter and we're seeing quite a shakeup to the global order. What looks like the beginning of a potential trade war between the world's two largest economies. Stocks have been hammered over the last week. Bitcoin decoupled and then recoupled. A lot of volatility in bond and currency markets. What looks like maybe a slow devaluation in the CNY, the Chinese currency, which has historically been a driver for Bitcoin. On the other hand, though, we've also seen a significant policy shift in the US's approach and attitude towards Bitcoin, led by the creation of the Bitcoin Strategic Reserve. So I'm excited to have with us today Nik Bhatia, best-selling author of Layered Money and his new book, Bitcoin Age, to talk us through the role Bitcoin can play in this transition and maybe what the other side of all this volatility looks like. Nik, welcome to the show.
Jesse, thanks for having me.
That's great. So I wanted to start off maybe talking about your new book, The Bitcoin Age, and then get into some current events. What inspired you to write this book, and what are the takeaways you hope it provides to investors and to people interested in Bitcoin?
Yes, the book is called Bitcoin Age. There's no "the" in it. There's actually another book out there called The Bitcoin Age, which is interesting. It came out just a few days before mine, which is okay. The book Bitcoin Age is inspired by really my time in Bitcoin. I've been researching and writing about Bitcoin for about 7-8 years now. And I wrote one book that I published in 2021 called Layered Money, which was an academic and accounting approach to explain Bitcoin to the financial world. So people that understand balance sheets, Layered Money is a chance to explain Bitcoin from that perspective. Now, it left a lot to be desired in terms of explaining where Bitcoin came from, because the book was about money and introducing Bitcoin as money. This book, Bitcoin Age, which I wrote for my students of my Bitcoin class, is my attempt to explain Bitcoin's story. So where did it come from? And what is the deep history behind its origin? As well as what type of asset class is it? Is it like equity? Is it like cash? Is it like gold? Is it property? Is it a commodity? Is it a currency? I think that question of what is money, what is Bitcoin, what type of asset is it, is very interesting to people and not necessarily well understood. And then, do I feel that Bitcoin is going to become the world's reserve currency and the currency that goods and services are priced in around the world? Or is Bitcoin likely to coexist with the current dollar credit system as it does today, right? Bitcoin exists today alongside the current financial system. I don't see it actively replacing the dollar today. And so my projection is that that co-relationship will also continue into the future. So a vision of the future that doesn't present Bitcoin as the new world reserve currency, but it does present Bitcoin as the new global reserve asset. Those things are very different from each other, and explaining why the credit system will persist in the future is part of that.
So how do you differentiate between the two? What do you mean by reserve asset and reserve currency?
Yes, so think about the credit system. And this is something I present. The credit system allows banks and financial institutions to create money out of thin air. That's what credit money is. When a loan is issued, a new deposit is issued. That deposit didn't come from somewhere else. It was created. And in that process of loan creation, the entire banking balance sheet expands globally, because when Bank A creates the new deposit upon creating a new loan, it has a new asset, which is that person will pay them back in the future with interest. And the new deposit, once that person spends that money and sends it to somebody who banks at Bank B, per the global banking relationship and the cartel under which we live, Bank B is obligated to then issue a deposit to their customer that just received funds. And so it takes one bank to create money. It takes two banks to circulate it. That process of money creation to finance global trade, to finance consumption, home purchases, business expansion, factory building, hiring of workers, I do not see that process stopping tomorrow, 5 years or 10 years into the future. That is the system, that is the machine under which we live. Also, banks have set up a global banking government for themselves to ensure that their ability to continue to create new money is protected by law and endorsed by governments. They've actually taken the national currencies and turned them into banking tools, banking instruments. The dollar, I argue in the book, the dollar is a global banking instrument. It's not the US sovereign currency. That happened over the course of the last century, which I outline in 6 steps in the book. And so, is Bitcoin going to become the currency of credit creation? Maybe one day we will get a situation that banks start creating a credit Bitcoin, and that credit Bitcoin circulates around the planet. People accept it at their stores, and that credit Bitcoin has a price versus Bitcoin, real Bitcoin, like a discounted price. 95 cents of a credit Bitcoin is worth $1 of Bitcoin. And then you have a relationship between credit money and Bitcoin that's Bitcoin denominated. I didn't project that future in the book because I don't want to advocate for a credit money system based on Bitcoin. We already have a credit money system based on dollars. Banks expand it, and we have Bitcoin to help us protect our time, our labor, our resources against a denomination that's being diluted. So can Bitcoin rise up to become a credit issuance currency as well in the future? Which it would have to be an altcoin, right? You can't expand Bitcoin. You can't issue a loan in Bitcoin and just create the Bitcoin for your client if you're a bank. You can create an altcoin, maybe called Bitcoin credits, but you can do that with dollars. So that is why I don't believe Bitcoin is the world reserve currency in 10 years, but it has the potential to be this global reserve asset, like gold, like real estate, is held as an asset over generations.
So if you don't, I mean, maybe it's not quite as extreme that it needs to be all the way to a reserve currency to be used actively in payments. What's your view on Bitcoin being used as payments? I have the white paper up behind me, and of course it's called peer-to-peer electronic cash, right? What are your thoughts on that and things like the Lightning Network and using Bitcoin for transactions and commerce and payments?
So slowly but surely, Bitcoin is being used as a peer-to-peer currency. People use it in goods and services and international trade. That, I believe, will continue to grow, and Lightning Network is an enormous part of that story because it takes Bitcoin settlement to the instantaneous nature. And I do cover that in the book. I explain that Lightning Network helps Bitcoin circulate the world and act as this digital cash with instant settlement. An amazingly important development for the Bitcoin network and Bitcoin protocol. And that only came about through tireless developers working to innovate ways to use Bitcoin. Now, if Bitcoin is continuing to be used more and more by people hand to hand as an online currency, that bolsters the network effect of Bitcoin as money. You can use it, you can store it. And that makes Bitcoin a great money. And so I believe Bitcoin will be used, as well as the Lightning Network, to facilitate hand-to-hand, peer-to-peer economic transactions for years and decades to come. The attempt, Jesse, with this book was to try to explain Bitcoin today and on its path to $1 million, to explain to people that they're not late but still early. I believe Bitcoin can go to 10 million or to 100 million in the distant future. But as a researcher and an author, I had to pick my lane for this book. And so I like to experiment with all of those things at the Bitcoin Layer, my research firm, and in interviews like this, and in my writing and tweeting. But this book had its own purpose in terms of trying to explain Bitcoin's origin and where it exists today and where it lives today.
You teach courses, interestingly, on Bitcoin and also on fixed income. That's kind of an interesting, how does that come about?
So I'm a bond trader by trade. So that's where I come from. I worked at a large asset manager with over 100 billion under management. About 20 billion of that was held in U.S. Treasuries. And I was the head of the U.S. Treasuries trading desk during my later time at the asset manager. So that's my background, where I come from. I'm a Fed watcher, a cash trader, which means that I traded repo and T-bills, and on the buy side, which means that I'm a fiduciary acting on behalf of large investors, so pension funds, cities and states within the United States, universities, and corporations, big tech companies. I was trading their accounts on their behalf. So it's my job and my duty to make sure that I'm doing what they've asked us to do. We don't control their funds. We are what's called an authorized signer, which means it's their bank account, it's their custodian account, and they've authorized us to move securities and cash in and out of it per what they've asked us to do. And so it's a serious job, and one that I treasure and hold dear. I learned everything. Yeah, I learned everything on the desk. And so during that process, I got the opportunity to guest lecture at USC Marshall School of Business, which I'm an alumni of USC, not the business school. I went to the College of Letters, Arts, and Sciences at USC, and it was a huge honor for me. And after a few guest lectures, the fixed income professor asked me if I wanted to teach the course as an adjunct professor going forward. I said yes, pivoted my career to a teacher and a writer. And after that, I wrote Layered Money for my students, my fixed income students, and for the people, to introduce them to Bitcoin. And then after I published Layered Money, the university read my book and they asked me to teach a Bitcoin course. So that's how both courses came about.
And how does Bitcoin get on your radar? Like from a bond trader, what was it about Bitcoin that attracted you?
I'm a curious person, and I'm also a student of sound money and had been since 2010. So
Okay.
Bitcoin was a natural discovery, even though it took me a few years of ignoring Bitcoin articles because
Sure.
I'm
Yeah.
busy with life. I'm studying for the CFA exam. I'm trying to get promoted. I'm trying to learn everything I can about cash trading and about repo. And so discovering Bitcoin didn't it didn't it wasn't urgent to me. It didn't, it everybody follows their own Bitcoin path, right?
Yeah.
Everyone gets the price they deserve. And so I didn't get a price that was offered to the market in 2011, 12, 13, and 14 because I hadn't done the work yet. But then I started doing
Yeah.
the work in 2016. And once I saw Bitcoin, you know, I would say that it was immediate. It was immediate that I something had resonated. Then I read Mastering Bitcoin and understood to the best of my ability how the network protocol secured, and the rest is history from there.
So were you one of the guys that in the wake of the last financial crisis that kind of had a lot of questions and then Bitcoin was something that answered some of those questions for you?
The timeline, not really. So I was an undergraduate student during the Great Financial Crisis of
Yep.
2008 and 2009. That led me to discover sound money and become a
When you
gold
say
and
some money,
silver
do you mean gold? Okay, gold bug.
gold
Yeah.
silver
Yeah.
and
Yeah.
being an advocate for those asset classes and being an investor in them and trying to learn more about it. And that period lasted until I discovered Bitcoin in 2016. So about half a decade of a precious metals bug, if you will.
Yeah.
And then when I discovered Bitcoin, uh, my entire approach to finance did evolve.
Yeah, that's kind of been my experience. I find that the gold guys are the guys that resonate most with Bitcoin. It's the easiest hop to come over to Bitcoin, and those are the people from traditional finance who tend to get it the fastest and understand it the best, I think.
You know, my discovery process, Jesse, was QE. So when QE was happening in 2010, I was, I was still a student, and I knew that this was a manipulation of sorts, and I needed to understand it. So just doing the work, reading, uh, reading news articles and zerohedge.com back in 2010 and 11, and just trying to understand what all this means. Then you get into the industry and you get access to Wall Street research and money market research, and then your learning can accelerate from there in terms of how the financial system works.
So flash forward to the current market, we're kind of in an interesting situation at the moment, right? So we've seen a lot of volatility in US bond yields over the last couple of days. Chinese yields look like they're drifting lower. And then we've got this revaluation of the CNY, which is interesting. You mentioned 2016. I remember I think it was 2016 when it looked like devaluation of the CNY was driving a lot of the price gains in Bitcoin. What do you think is going on here at the moment? How do you explain
Yeah,
all of this?
yes, the CNY deval was, I believe, August 2015, and preceded a lot of the uh, early part of that bull market in Bitcoin. When it went from 200 to 20,000 over the course of 2015 to 2017. Yes, right now rates and foreign exchange is moving dramatically. Volatility has been introduced into the market. Volatility is a byproduct of uncertainty, and uncertainty drives volatility because market makers step back. Means that they don't make tight markets. They step back and they say, somebody said, "Hey, I need to sell you 100 million of treasuries," and they wait, they leave the message on unread, or they say, I'll call
They
you
get the
back.
bell, ding, 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 ding,
I'll,
ding.
I'll call you back, right? And that's a practical, way to explain what it means when liquidity goes thin, when market makers
Yeah.
step back. It literally means they don't call you back. They don't make the market. And in that process, the bid-ask spread gaps out. The matching between bidders and sellers in the market widens. And the reason it widens is because the participant that keeps it tight, the money market, the market maker, is not answering the phone. And so that's what's happening now. We are getting wide markets because there's uncertainty and market makers don't know what to do. You mentioned CNY. So the Chinese yuan has weakened a little bit over the course of the last 2 weeks. It isn't dramatically weaker than where it was in February, which is interesting. Last night, there was a move that made my, eyebrows go up. But that's, again, there's an uncertainty. So there's a lack of willingness to come in and buy the other side of the selling. So treasury yields themselves are also in a bit of price discovery. They were going down with some speed and some strength over the last week with the stock market sell-off and this flight to safety. That's a classic move in stock market crashes. You get yields falling as people sell stocks and buy treasuries. Then you had a reversal over the last 48 hours. Yields went up by 60 basis points in just 2 days in the 10-year part of the curve. They're already down 15 basis points from the highs from last night. So again, wide markets. Wide markets.
I wanted to ask you about that reversal. Like, what would drive that kind of reversal, that 60 basis point gain? Do you think, people are talking about Chinese selling bonds possibly to finance stimulus efforts or, even to bolster their own bond market or something else? Do you think it's something like that? I saw people talking about a trade blowing up. Or do you think it's just wide markets and market makers not picking up their IB chats?
Yes. I'm glad you asked this, Jesse, because this is an opportunity to just explain to people that I myself and people that you read on Twitter or people that are writing independent research notes, it is so difficult to know what is happening in the moment.
Yeah.
And we do actually, the September 2019 repo crisis is a good example. In the moment, nobody knew what was happening. Now we know through research in the Fed that there was a treasury basis trade, which means long treasury securities and short derivatives such as swaps or treasury futures, and an arbitrage trade that was going on in the market that blew up and caused a set of financial providers to go without repo funding. And so to answer your question, I don't know. Okay, that's really the most important thing. I don't know what's happening. So yeah, so then let's talk about it. So I'm also a tick watcher, which means I have my candlesticks and I have screens where I look at daily candles, but then I have screens where I'm looking at 15-minute candles or 5-minute candles where I'm actually watching the markets tick together, like on the same screen, multi-asset, cross-asset tick charts. And so in that way, I'm able to see if there's an algorithm on and everything is moving together, that I know that this is one move. There's nothing happening special in Bitcoin that's not happening in stocks, that's not happening in yields, that's not happening in USD JPY, right? For example, there are periods where all of these things tick for tick together. And it means that correlations are at 1, everything is moving together, there are algorithms controlling, it's a risk on, risk off environment. Then there are times that things don't tick together, or that correlations break down, and maybe Bitcoin is leading. Like for example, over the weekend, Bitcoin crashed on Sunday morning. Then stocks crashed on the Globex open, but at that moment, Bitcoin didn't take another leg down. So it stopped ticking with stocks for about 15 to 17 minutes. I was watching all of this. I was on the desk watching. It's just what I do. It's my practice. So so I have to say all of that to say that I was watching the tick chart yesterday, last night, and then this morning when I woke up. And even I woke up in the middle of the night to see how things were ticking as well, because it's very interesting to me, because then it gives me the ability to answer your question a little better. So yesterday, when yields started to pop, the Chinese yuan was experiencing a deval. So CNY, I was watching CNH, which is the offshore, that's the live traded one. I was watching CNH tick up, which means weaker, and watching treasury yields tick up at the same time. That led me to believe, tariffs are coming in, China is deciding to deval, sell treasuries to defend their currency after a certain point. Go ahead.
Yeah, can I stop you there? So if the tariffs are coming in, don't they want to devalue their currency? So they wouldn't be selling treasuries to protect the currency, would they?
So you devalue your currency, but then you raise dollars to be in a position to then stop
I see. Later.
Okay. Right?
Yeah,
Something right, like that. But again, Jesse, this is why it's so important for me to start your question with the answer, I don't know, because I cannot know. And I'm not some some FX reserve expert, right? My practice is to watch the charts and to try to interpret that. So then to continue, yield started to tick up. Chinese yuan was devaluing. I was like, there's something going on there. Then the yuan reversed, right? It hit 7.42, and right now it's 7.38. So it reversed. It stopped, but yields kept going. Yields kept going on the tick chart. So then I had to look for another explanation. And then I understood that this could be the basis trade blowing up all over again, because I've been watching swap spreads. So swap spreads are the difference between treasury yields and the derivatives rates curve. So swaps are basically rates in the derivatives world. Treasuries are rates in the cash world. So swap spreads started to collapse. It means that there was an absence of demand for treasuries in relation to swaps. And I apologize, but I literally have to pull up a chart here because I need to see what TIPS yields did over the last 24 hours to give even some better context to what happened in treasuries. But I'll continue. So the basis trade, if the basis trade blowing up, it would mean that someone who was long cash treasuries and short derivatives has to unwind. It means they have to buy swaps and derivatives or receive and sell cash treasuries. That would drive swap spreads down, which was happening. They were collapsing in an unorthodox move. So swap spreads were collapsing. It means that there was a selling of cash treasuries that was not substantiated by broad rates markets. It means it was a dislocation of the cash treasuries themselves. And so that leads me to believe that the move from last night was the basis trade unwind, because it was confirmed by swap spreads. It was also confirmed by a steepening yield curve. Twos were not doing much. So usually when there's like a panic in rates, all yields rise in a way that, yes, you might have steepening or a flattening, but they're all moving. Well, twos, I was watching the tick, twos were not moving that much. It was all a steepening of the yield curve, which means literally bidless 10s and 30s in US Treasury, the physical market. And so if that's if that's what was happening, the basis trade unwind, it was very alarming, because it it went from 420 to 430 to 440 to 450 all in a few minutes. It was just absolutely wild to watch. Maybe whoever was unwinding the trade finished the unwind, and that's why treasury yields are back down at 4.35% as of this recording, from above 4.5%, where they reached last night on Tuesday, April 8th. So those are, I hope that I'm answering your question a little bit. The beginning is, I don't know. Could have been China at the beginning, maybe not. There was something going on in the basis trade because of swap spreads. That much I can say. But who intervened? Who blew up? Did somebody go out of business last night? I just don't know, and we won't know for a little bit.
Yeah, no, you can only get so much out of the tea leaves. So we've got all of this volatility playing out. We've got, maybe people are talking about rate cuts coming. We've got devaluation in the CNY. We talked about how that moved Bitcoin in 2015, 2016. What do you think? And we've still got ongoing tariff uncertainty. We've got sell-off in equities and risk assets. What does all this mean for Bitcoin adoption, do you think? Kind of, maybe in the midterm and then kind of longer term. Does this drive the narrative of Bitcoin being kind of a more neutral, or maybe even a safe haven asset? Or what are your thoughts on that?
I love to lead with price, and so Bitcoin is down this month as volatility is introduced. That fits in with our framework that we use at the Bitcoin layer. We have a proprietary metric called TBL liquidity that our TBL pros have access to, and TBL liquidity suggests to us empirically that when bond volatility is introduced to the market, or a strong dollar, this is a tight financial condition for stocks and Bitcoin. And so we have confirmed our approach in understanding what moves Bitcoin again this week, with the introduction of volatility and a sell-off in Bitcoin. Now, on the tick chart, how is Bitcoin performing versus stocks? So they're holding in pretty tightly with each other. I mean, I got the 4-hour candles. They look the same on Bitcoin and stocks. I mean, 4-hour candles on my screen, Jesse, goes back to about the 29th of March. So like 10 days on the screen, and the charts look the same. So I have to answer your question with what I see on my screen, which is that right now, Bitcoin and the stock market respond to liquidity in the construct of the way that we've built it, inspired by Michael Howell and Cross Border Capital's Global Liquidity Index. People should understand his book, Capital Wars, if they want to understand this version of liquidity, asset-based liquidity, and what it means. So I have to lead with that. So that's the short-term or the medium-term answer. On the long-term answer, Bitcoin is being acknowledged as a long-term store of value by the administration, and this is important for a very specific reason. It does appear, through the last 48 hours, it does appear that the next 4 years of U.S. executive branch policy is to reset the global order. Trade and monetary and currency, they're all the same thing. And so if it's a multi-step process to reorder the world's trade and currency relationships, and the administration is in front of you saying, we are going to buy Bitcoin, we are going to have a strategic Bitcoin reserve, we're going to have a sovereign wealth fund, we're going to promote Bitcoin innovation, and Besant says that he's a student of economic history and he wants to be part of Bretton Woods 2.0 or 3.0, however you want to call it. My goodness. If you can see past the sell-off in risk due to the introduction of volatility and see the longer game, And you also have to trust that they'll be able to execute on it and that they won't hit any roadblocks along the way, which are enormous ifs. But if we can get past that, then Bitcoin does become this first layered money over time, which I laid out in my first book. Jesse, it has to be, because if you take their word for it, they're going to go check out Fort Knox, and they're thinking about gold as an administration. The world thinks about gold as well. And so it almost has to be part of how they're going to reorder. Now, what I find fascinating is the idea that I cannot imagine, or I should say, it's a very low probability to me that you get a dollar or a Chinese yuan that in the future, in this new Bretton Woods, Mar-a-Lago, we'll call it, right? In the new Mar-a-Lago world, because that's where the meetings will be. So that's what it will be called. They'll be down in Florida. And so if there's a new Mar-a-Lago accord and agreement across the world on currency, does the dollar in that world, will it say on the dollar, this $10 note promises to pay either 1/8 ounce of a gold coin or 1/10 of a Bitcoin? I'm just making up the numbers for simplicity. There's no math involved there. Do I envision that? I cannot. I cannot envision. The dollar would say it, and I cannot envision that China would say it. So if it's not a gold exchange standard or a Bitcoin exchange standard for the currency, if it's not, what does it look like? And that's another thing that I don't know. I'm just not. You have to do what you know how to do. And I'm here to provide Bitcoin and global macro research to people, not predict the future. I want to try to understand it so I can help you predict the future, and I'll also make my own guess. But it's just one of those things where we're in a reordering of the world. I've never felt an urgency like this one to read every White House speech like this. People should please read Steve Myron's speech from April 7th in front of the Hudson Institute that he released and he made on the day that the tariffs went live or to respond to the tariffs going live and to explain the administration's stance and why they are doing it. It is a reordering. If you want to understand or even come close to predicting the future of what will happen, you now have to read the speeches from Steve Myron, Stephen Miller, Scott Bessent, and listen to the president and try to read between the lines. Account surplus is because people buy our treasuries and stocks, right? So money comes in, the dollars come in. Now, the dilemma here past the gold, because the dilemma originally described the fact that there would be too many credits outside of the United States and they would claim our gold, which were limited in stock. The Eurodollar system helped delay a lot of that gold retrieval because it allowed people to invest their dollars in Europe and in European domiciled instruments that were interest paying, all in a separate offshore dollar system. That made them less likely to go and exchange their currency for gold. Now, today, we have U.S. treasuries being held by the rest of the world. If we are to reduce the trade deficit, because that is the administration's agenda, it's to end the 50-year trade deficit or to mitigate it, then what you are mitigating itself is the capital account surplus. So reducing the amount of treasuries that are held abroad. And so what does that create? Does that create a dynamic in which there's money to go into gold or Bitcoin? Potentially. But I don't have a great answer to your question because I'm thinking about the first order effect. I don't know what the second order effect is. But the first order effect of a reduced current account deficit is a reduced capital account surplus. And that means less treasuries held abroad. So that's the first order effect answer, the best answer I have for you there.
Are you optimistic on this reordering? I mean, I've concepts like the fourth turning and things like that. I've kind of felt that maybe this is one of the reasons why I was positive on Bitcoin initially, is it felt a way to let some steam out of the system that wouldn't result in blood on the streets. And I think that's also what Trump is trying to do with this reordering. Are you optimistic on this? And it always felt like even people who are, confident on Bitcoin hyper Bitcoinization, this kind of concept of Bitcoin becoming the reserve currency of the world, is that they would say that there's a lot of volatility between where we are now and then, that kind of world as well. And there's a period that we have to get through. How do you feel about this reordering right now? Are you optimistic?
I am. And the reason that I am is that something needed to change. So there are several things that are broken with the US dollar and system and the United States government. I used to work for a brief time in health insurance, and I saw how much money is being stolen from the American people. I also, God willing, Jesse, I do well and I'm able to provide for my family. That doesn't mean that goods and services are affordable. They're out of control expensive.
Yeah.
And that, I believe, is a direct result of this broken system. So reordering is welcome. I believe that 80 million Americans voted for the reordering. And so and a
lot of those 80 million, they don't have a lot of equities, right?
That's right.
I think that those people can take a lot of pain. I think that's something that people don't maybe fully realize.
It's not that they can take a lot of
maybe
pain.
They're not taking the pain. Other people are taking the pain, maybe.
It's not that that they can take it. They've taken it and they voted for something different.
Yeah.
So they're going to rock with it. And that's the way to approach it from my perspective. And so that's why I'm going to go read all the speeches, because the people voted for this. They are rolling it out, whether they, pivot, cave. We know Trump is a very volatile personality. I mean, he's an egomaniac in many ways. And so how does an egomaniac respond to certain things? I don't know. I really don't know. And me projecting, what Donald Trump is going to do, I don't think that that's in my best interest. But what I can see, I'm a big, proponent of proof is in the pudding. Who do you put in the cabinet? Says a lot. What are your day one executive orders? Says a lot. Look at what he's done this week with the tariffs. Read Steve Myron's speech. Listen to Bessent and what he's trying to explain. He said, the American dream is not buying cheap Chinese TVs. And so we are changing what our approach is. If that's your American dream, that is going to change for you, because that is not the American dream we are trying to go after. So, people can probably deduce my political leaning within this whole thing, but I do want to be as objective as possible, which is that the electorate has come in, they voted for something, it's being rolled out, it is a reordering. They don't care about, they didn't care about a 20% fall in stocks. And so that's also material information. Maybe they care about 50 and completely pivot, right? So that's not something that I can project. And that's why I'm an analyst, right? Not a crystal ball reader.
Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today to order.
Yeah, and I think the exciting stuff is yet to come, because I think that how Trump interacts with China, I think will be very interesting. I'm based in Taiwan. I've been here for 25 years, so I've spent a lot of time watching this stuff. Over the last 25 years, I don't think China has had been told no very many times. So it'll be very interesting to see how they react to this, and it'll be interesting. I think there's going to be probably a lot of interesting things will develop over the next couple of weeks.
Yeah, and talk about, what else I don't know. What a great guest I am today, Jesse, for you. I'm just telling you what I don't know instead of what I know.
Yeah.
But it's fun for me because I'm a student, a lifelong student. So
Yeah.
I always just get excited about what I'm going to learn next. What else do I not know? I don't know China's reaction function here. I also don't know how bad it is in China in terms of the economy. So I think I was listening to it might come to me, but I was listening to something yesterday about the overcapacity in China, right? And because they were talking about elasticity, this was it was Steve Myron in the Q&A from his Hudson Institute speech. He was asked about the reaction function of China, and he said that the burden of tariffs fall on the existing factory, because you can't move that factory. And if you've put that factory in with currency manipulation baked into it, and the tariff eliminates that advantage, your overcapacity cannot be dedicated now to something else for an economic purpose, because it was built under a false pretense. It was built under a too cheap currency. And so if China has built I don't know how many, 10,000 factories, 100,000 factories across the country that are now, not only are they now going to receive less business because of tariffs and the cost doesn't make sense for American consumers, but what if they can't even be repurposed without a massive amount of investment, because there's nobody else that's going to buy what they were making in any sort of free trade relationship between China and country B, now that the US isn't the consumer. So is that the case? And how bad is it in China if that is the case?
Yeah, it's difficult to gauge for sure.
I don't know any of those answers yet.
Okay, another thing I wanted to ask you about is the U.S. debt cycle, I think, just very loosely moves around 4-year periods. And I was always wondering, do you think that that's something that Satoshi was looking at when he created the 4-year kind of cycle for Bitcoin? The idea that the U.S. needs to refinance like roughly every 4 years, and then there'll probably be looser money that will add as a tailwind for Bitcoin price. What do you think about that?
I love that concept, because when we're thinking about the Bitcoin price cycling up in 2017, 2021, and the beginning of 2025 hitting another all-time high, that it might be driven by this halving cycle, but it might be driven by a liquidity cycle. And so I think that's an interesting framework, and we'll do more work on that.
Okay, another thing that's interesting that's playing out is the U.S. has, they're taking a different approach not only to Bitcoin but also to stablecoins, and at the same time in Europe, they've announced a CBDC that looks like it's going to come to market fairly soon. What do you think of these two different approaches and strategies?
Yes, Europe is let's say the European Union is exposing itself as a very unique animal, one that literally survives off of control. And so I did project that the ECB would be first to launch a digital euro, first among the US versus Europe, basically. and that looks like it's going to be right. We have now an executive order that's banned the idea of a CBDC, which is fantastic. It also puts the Fed. Another part of the reordering, Jesse, is the Fed's role in all this. What is the role of a U.S. central bank? What is the role of the Fed? Who does the Fed work for? The Fed has become highly politicized and votes 90+% Democrat, or sorry, donates 90+% Democrat. So what is the role for the Fed in the future? I think that's an interesting question. Do we get that question being asked in the next 4 years while Besant is trying to figure out how to reorder the global monetary system? That's something that is interesting to me and I'm thinking about, and now I'm blanking on your original question. Yes. Yeah, I mean, again, stable coins issued by the private market as dollar substitutes and then buying T-bills is basically digital banking, and that's something that I projected in layered money. That makes sense to me, and from a layered money perspective, T-bills being owned by stablecoin issuers that are issuing digital dollars is the same exact thing as layered money and fractional reserve banking, deposit banking, and whether or not the stablecoin issuers are fractional or not, and how that will be regulated is a matter of banking regulation. So it's a state issue, and I just like free market. So I like to see that, and it does boost the case for the dollar. I really have this feeling that in the future, that a lot of fiat currencies will go away and will go. Countries will just go to a stablecoin standard of sorts, where that's what they're using. Yeah, AV moving through. Yeah, you know, my USA chant starts in my brain when I see it. Um, the Hey, God bless America. And, but in all seriousness, the dollar is backed by that. And, which is so interesting because then when you juxtapose other fiat and you want to talk about really not backed by anything, it's all of non-dollar fiat. It's, and actually, the Chinese yuan is much more backed in terms of the state defending it and the state's ability to defend it or just say what the currency is. They also have real assets in China. They have a lot of gold, for example. They have a lot of natural resources there in China, for example. That the non-dollar world is really built on thin air. And your observation about foreign currency tether non-dollar stable coins is the market example of what I'm saying. It's the market's expression, I'm sorry, of what I'm saying.
Yeah. And what about the ETF? So the ETF for Bitcoin was obviously like a massively successful product by all accounts, maybe the most successful. How do you think that has changed the game in terms of institutional adoption? And what do you think, could be maybe, because I'm sure people on desks within Wall Street, like they look at that success and they want to replicate it. What do you think they're looking to do next? Is it tokenized securities? Is it stable coins? Is it meme coin ETFs? What is the next step, do you think?
I don't know what they're going to do. They'll probably try anything they can to make a profit.
Money.
But in terms of the success of the Bitcoin ETFs, it's record breaking. The Fidelity and BlackRock, last time I checked, obviously we've had some volatility, But the last time I checked, IBIT plus FBTC was already bigger than GLD. And
Yeah.
I mean, that's insane. And so the adoption of Bitcoin ETFs brings another $100 trillion into play that wasn't in play before. So it's a big deal.
Yeah. Oh, another thing I just thought of to ask you as a bond guy is I think people underappreciate sometimes mandate restrictions and how it's difficult for institutional investors to do things like buy Bitcoin. And this was kind of an interesting narrative around MicroStrategy, was that it gave bond people through their CB issuances, a mandate friendly way to get Bitcoin exposure. Is that what happened there? Is that part of the demand?
I think that Saylor wants to unlock it. And I know that at the margin, the people that are buying convertible MicroStrategy bonds are already working within mandates that are more loose, right? MicroStrategy isn't trading in the IG market, which means, the investment grade, vanilla fixed coupon bond market. I think that's maybe where he wants to play in the future and get there to get access to that capital. But you're right to mention mandates and investment guidelines, and I think that you're gliding toward that area, and that's definitely, it appears to be the goal. Capital market underwriters are clearly thinking about how to get it there. So I think you're in the first inning of that process, but you're on the right track.
And that kind of segues to this concept of bit bonds, which I think is very interesting. So that's the idea that the US Treasury, they could start offering products that are backed in part by Bitcoin. And I think the idea is that the price appreciation of the Bitcoin at maturity is split between the investors and then the issuer, which would be the Treasury, I guess. What do you think about that? I mean, because that seems like kind of the same approach, because it opens up those people that are mandated to trade treasuries to be able to get Bitcoin exposure as well.
I think that it's a great idea, and it just takes the first one to do it. So, getting the idea out there, but also when we think about Bukele and his volcano bonds, the idea has been out there that a fixed income.
I've been working on it for 4 years.
Yeah, I know. Well, yes. Yes, I know about that. And so the idea of Bitcoin linked fixed income securities, or fixed income securities that pay a kicker, that has always been around. It's always been around, where payment in kind, or coupons that can share the upside. So it's just a structure thing, and it just is going to take the first issuer. So again, that's why you got to read every speech from the White House to see if that's where we're tracking.
Yeah. No, I think it's such a great idea. There's so many benefits, like from the investor side as well, especially for like emerging market issuers, like you mentioned El Salvador, because that Bitcoin can be custodied somewhere, the addresses can be public, and it really de-risks it in a lot of way for the investors. So I think for those emerging market issuers, it could really let them cut their cost of capital significantly, because there's a lot less risk to it. If they default, it's not just going to go like there's nothing there. You at least have some Bitcoin that you can claim, and you can check in real time if it's actually in the wallet or not. So I think for emerging markets, it could be especially a really kind of interesting asset.
Yeah, again, it's just going to take the first one to go in, and but there is a lot of risk for the issuers. So like United States can afford it, because we we can print our own money, just or issue new non-bit bonds to make the customer whole, anything like that. So there's not a lot of risk for the US to try it, but there would be a lot of risk for you see how Bukele's been shaken down by the IMF.
Exactly.
Even way after the fact. So it's not without risk, and it's definitely something I'm watching.
Yeah, I don't think the IMF is going to go shake down Trump for bit bonds, though.
No.
So, but that also de-risks it. The strategic Bitcoin reserve, I think that makes it easier for other countries around the world to try as well. It's not nearly as kind of controversial or bizarre as it would have been, even a year ago.
It sounds, Jesse, that if it's going to happen, it's in the part where they have to do the monetary reset, or get some, basically source, either, if they want to still have the United States still wants to have a capital account surplus, to source some of those funds from abroad, you have to provide a new incentive structure. And so in the reordering, that sounds like that's where it can come in. But when we think about tariffs and deregulation and trying to prevent currency manipulation, those things appear to be first up.
Yeah.
And then the Bretton Woods style would appear to have to come afterwards. So fascinating times.
Yeah, definitely. Well, Nick, I really appreciate your time today. We've kind of gone a little bit over and onto some, kind of different subjects and tangents, but I really appreciate the conversation. Is there anything you'd like to share about what you and your team are working on before we wrap things up?
People can go check out everything we're doing at thebitcoinlayer.com. So you can find links to my book on Amazon there. You can find our channel, our podcast, and our premium research service, which is called TBL Pro. And what we do at TBL Pro is we're building a framework, a quantitative framework for thinking about global macro and Bitcoin. We're students ourselves and trying to narrate the march toward a new global order, Bitcoin becoming a global reserve asset, and embracing the volatility all along the way. So thebitcoinlayer.com, and you guys can check out everything we're doing.